Sehr geehrte Damen und Herren.
Ladies and gentlemen, a cordial welcome to the Wienerberger Investor and Analysts Conference on the occasion of the presentation of the 2013 results. As usual, our CEO and our CFO will start with a brief presentation outlining the most important developments in 2013 and their expectations for the current year. Afterwards, you will have a chance to put questions to the members of the managing board. When you are asking questions, please wait for the microphone because this conference is being webcast and you need to be heard. Thank you, Klaus. Ladies and gentlemen, good morning to everybody. Willy van Riet and myself will briefly walk you through 2013 and give you an outlook to 2014 and exchange ideas with you. Looking back to 2013, I would say, from today's point of view, that for us it was a successful year. Not only as far as the figures go, but mainly bearing in mind that 2013 was a difficult year for the construction industry. You will remember, although it's difficult to do so today, you will remember that this time last year, we had snow all over the country. We had snow well into April in many markets, which had a negative impact on the construction industry. So the first half of the year was characterized by a harsh winter, a lot of snow, and flooding in Germany, Poland, and the Czech Republic. The catching up effect in the second half of the year was a strong one, but not enough to compensate for the losses in volume during the first half of the year. So, we had good revenue growth, up by 13% to almost 2.7 billion, and an increase in EBITDA by 9%. That was a sound and satisfactory development. Another point I'd like to make at the beginning of the presentation, because it tends to be overlooked. Many of our markets in 2013 were well below the level of the crisis year 2009. The Czech Republic, Slovakia, Germany, but also Netherlands and France. As far as new housing starts are concerned, these markets were performing at a lower level than in 2009. You will remember our restructuring program, which we implemented in 2012. 50 million costs were saved. We achieved our targets. Last year alone, we reduced costs by 19 million, and we succeeded in performing well during the second half of the year, and we have built a strong second leg to stand on. That is pipes and pavers, a division that contributes a lot to Wienerberger's revenues, and it's a division that creates added value. So we are well above the hurdle rate of 11.5%. Well, this is just to indicate what the market situation was like. We had a difficult market environment characterized by a downturn in many European markets. One thing stands out, and I should mention that Germany was also going down as far as new housing starts are concerned, and that was mainly due to the fact that the weather was so bad that many construction companies simply could not work, and this is why fewer single-family homes were built. We expect the situation to improve this year. England performed very well in the second half of the year. mainly thanks to government programs aimed at young people who want to acquire their first home. The government had adopted a stimulus package, which will certainly also be felt this year and next year. A brief overview of volumes and prices. Western Europe, clay building materials, because of the unfavorable weather conditions, a decline in volumes, but prices were increased accordingly, and inflationary cost increases were covered that way. In Eastern Europe, despite shrinking markets, our volumes remained stable. And we were pursuing a proactive pricing policy. You will certainly ask us by how much we reduced prices. It was a single-digit percentage figure, but we were able to achieve volume growth, and we were gaining market shares. In North America, Wienerberger was growing with the market. Single-family homes forecasts in 2012 had announced an increase to far above 1 million, which wasn't realized. The number of units is around 920,000. So the new housing starts developed as we had expected, and the price situation in North America was characterized by regional competitor activity. I wouldn't call it a price war, but we had to put up with price reductions. We had to accept that under pressure from competitors who really stepped on the accelerator, if I may put it that way. As regards pipes and pavers, we've seen a stable development in terms of volumes and prices for Pipe Life. It was stable because we were doing very well in project business with Pipe Life, mostly large-scale energy supply projects in Africa and also in Europe. We were able to supply many of our large diameter pipes. Steinzeug Keramo, that is ceramic wastewater pipes, a good development considering the situation of the market. And Semmelrock was able to stabilize in terms of prices, and thanks to restructuring and despite volume losses, margins were higher for Semmelrock. Let me give you a brief summary. Willy van Riet will give you the details later on. So we have a strong second leg to stand on. Good contributions to revenues and EBITDA. Here are the figures. A clear message. We've succeeded, thanks to our business model, to generate strong cash flows, and we've been able to implement a strict financial management. Net debt has been brought down to just under 540 million. That is a clear indication of the fact that we are highly committed to go to less than 2.5 EBITDA to net debt. A few words about the individual divisions. Pipes and pavers, a strong second leg, good project business in Europe, somewhat weaker markets in the Netherlands and France, strong competition, particularly in France, for Pipe Life products, and the northern European countries were stable but not growing. But that was made up for by strong project business. Steinzeug developed very well. A decline in profitability due to one-off costs. This is mainly due to the fact that we are going to eliminate one of the sites in the Netherlands, and we have already made provisions for that. So our network of plants will be made more efficient. Cost optimization at Semmelrock produced satisfactory results. We're well positioned in all Semmelrock markets and expect good developments for the future. In the clay block segment, a decline in volumes due to weather conditions. We're doing well in terms of prices. In Eastern Europe, we are more offensive in strategic terms. That allowed us to gain market shares. Savings produced the necessary results. We've done everything we had intended to do. The American market is in a process of recovery. A volume increase, some pressure on prices, and with plastic pipes in the southern part of the United States, we have a location which is operating at full capacity, but a slight decline in results because of the challenging market environment. Here are the results broken down by segment. You can see the shares in revenue and profitability. It's even clearer when you look at results by product, contributions to revenues, and EBITDA. In the ceramic building materials division, clay roof tiles play an important role. And of course, weather conditions matter for clay roof tiles because roof setters can't work when there is snow on the roofs, and this has an impact on the profitability of the company. Before Willy van Riet takes over, I'd like to show you some examples of our new product areas, because we would like to show you that we have invested a lot. Despite the crisis and despite difficult conditions, we have invested in new products and in innovation. Keramo Steinzeug is the leading producer of ceramic pipes, producing 100% recyclable ceramic pipes. So the carbon footprint is perfect, and when public tenders are organized, we enjoy an advantage because the public sector has to use sustainable products to the greatest extent possible. So we are clearly taking a step in the right direction. Here is an example from Poland. We won a major project there. We also won projects in Bulgaria and Hungary. So particularly for household sewage, but also industrial sewage, ceramic pipes are very well suited. Pipe jacking, that is trenchless digging, is a great advantage that allows us to win market shares. Semmelrock is a market leader in Central and Eastern Europe in pavers. This is an example from Vienna, the new central railway station. We have supplied integrated systems that have easy to clean and easy to maintain surfaces. So we are performing well in difficult markets. This is an example of pavers used in public spaces, but such pavers are also used for garden design. I mentioned Pipe Life. This is an example. We are the world's leading supplier of large diameter pipes with diameters of up to 2.5 meters, up to 600 meters long. They are extruded in Norway, and they are used for large-scale energy projects. So here too, we've been able to position ourselves well thanks to Pipelife. In Wienerberger's core business, that is clay blocks, there is a clear trend towards higher energy efficiency in building. Infill blocks do not require additional thermal insulation, so they can be used for low energy buildings, passive houses, energy active or energy positive houses. So we are gaining market share in this respect. Discussions come up again and again about whether or not bricks or clay blocks will maintain their market shares. 4 years ago, we built a plant near Angers in the west of France. So we are in a region of France where concrete used to dominate the construction industry. We've been able to place clay blocks in the market. This is a student hostel which has to meet high requirements in terms of energy efficiency, thermal insulation, and sound insulation, and we were clearly able to outperform other building materials. As you all know, we're suffering from the fact that services and facilities for buildings are becoming so sophisticated, complicated to maintain, and very expensive. This is an office building in Vorarlberg, built with our products, and it's self-sufficient in terms of energy. It needs no heating system. This is an architectural example, a project from Finland. A light flooded annex was built there to a hotel. This is a roof example. Flat roofs are being compared with pitched roofs. With our products, we're well positioned in both. We can offer sustainable solutions that are better than a flat roof. We were also present in Sochi. We supplied clay roof tiles for the roofs of the buildings in the Olympic Village. So, as I said, Wienerberger has repositioned itself, introduced many new products, and therefore we are well prepared for the future and hope to be able to meet the requirements of our demanding customers. Ladies and gentlemen, I too would like to welcome you cordially. I will briefly walk you through the results for 2013. You have received the documents, you've read the press release, and I'm sure you will be putting questions afterwards. So the consolidation effect of Pipelife contributed 15% to the revenue change. This shows that the setback we suffered in our traditional business has been compensated for through diversification. But developments of prices and volumes are also important. Our volume has only gone down in organic terms by 1%. Prices in our organic business were almost stable across all product groups, and the FX effect was far less than with many of our competitors. Revenues only declined by 1% due to the FX effect, which is related to the strong euro, the strength of the euro against the dollar, the ruble, etc. That worked against us, but nevertheless only 1% decline. 15% revenue change due to the Pipelife consolidation effect. Heimo said already that stable prices were achieved in a challenging environment in 2013. It was a very difficult beginning of the year. We suffered greatly during the first quarter because there was so much snow. I come from Belgium. Normally in Belgium we don't get any snow, but there was snow last year and no construction activity going on. Nevertheless, we managed to pass on cost inflation through price increases. So our price management was very good. Eastern Europe, we were our prices were under pressure as well, and there we decided to reduce our prices in order to allow our plants to work to full capacity and also to strengthen our position. We succeeded in doing that. We had a cost advantage and we made full use of it. And the cost reductions were in the lower single-digit range. North America, at previous conferences, we also already told you about the situation in North America. In the clay block segment, we had Boral as a competitor, and Boral was trying to gain market shares. We had to react to that, and we reacted well. And I think we succeeded at least in maintaining our market share. Moreover, in the fourth quarter of 2013, demand was high in the United States. Business activity was picking up in the second half of the year, and we used that to reduce our stocks. So our stocks were brought down, and that also had an impact on the result of the fourth quarter. So this is what we did in North America. That is what I call active working capital management. You just make use of opportunities that present themselves. For Pipelife, there were price fluctuations over the year. 60% of the costs in pipe production are due to crude oil prices, and we were able to pass the price increases on to the market. And when crude oil prices went down, we didn't immediately reduce our pipe prices. So again, proactive price management. Our restructuring program was started in 2012 and continued into 2013. We started mainly in Western Europe because we saw that markets were declining. The Benelux countries, Germany and France, the restructuring program was fully implemented there. It cost us 43 million. And by 2014, we wanted to generate 50 million. We are slightly above target. Cost savings had been budgeted at 18 million. We are just over 19 million, and we will make our target of saving 50 million by the end of 2014. Structural adjustments have been made. No more major restructuring is being planned. Minor scheduled restructuring always happens. That is part of our day-to-day business. As regards the sale of non-operating assets, that was already announced in 2012. When plants are shut down, you end up with real estate. Closed plants, buildings, and real estate. And we are now in the process of selling those assets. We started doing that in 2012. We continued in 2013. And we've succeeded in selling non-operating assets worth 22 million. The cash generated was 13.6 million. Why the difference? There is a project that has already been implemented in England, but the cash will start flowing in the coming years. But it's 100% secure, so this is something we can certainly reckon with. And we are confident that we're going to make the 75 million target in the coming years. We are not selling everything at any price. We know the value of the real estate we have, and we're not under pressure, and we're only realizing assets if we know that we can get an appropriate price. So we're going to continue along these lines until 2016. Now, how is that reflected in the income statement? Revenues up by 13%. Plus 350 million. Operating EBITDA, Pipelife contributed 31 million. Nevertheless, well, the operating result of the clay block business was not so good, but I think the figures we can now present for 2013 is really satisfactory. The slight decline in EBITDA margin is due to an improvement, actually. Pipelife now has lower margins than the brick business, and this is reflected in the figures. We have a positive EBIT of 55 million. No special restructuring costs, no impairment charges to goodwill, and the release of a provision that was booked in 2008 for an impending antitrust penalty. So we don't need that provision anymore, therefore it was released. For those of you who read our reports very carefully, originally we had provisioned 10 million, but in the meantime costs have been incurred. This is why 9.4 million have been released now. Our EBIT is at 64.7 million compared with minus 21.7 million in 2012. Now here you can see the EBITDA changes by segment. A slight decline in the clay block business in Western Europe and to a certain extent also in Eastern Europe, pipes and pavers, a significant increase, including the 31 million Pipelife consolidation effect, plus a plus in the North American business, a slight decline at the holding. The holding also includes our Indian plant, which was performing well, and costs at group level increased slightly, including provisions for the group as a whole. Loss after tax, 7.8 million, but if you compare that with 40.5 million the year before, it's significantly better because of the operating result. When you look at the financial result, 50 million less, but of those 50 million, 42.5 million, you may remember I complained about how IFRS considers the consolidation of Pipelife because I felt that the existing package would have to be increased in value. That generated an increase by 42 million in financial results in 2012, and that is no longer there in 2013. Income from associates is declining slightly because in 2012 we still had a contribution for the first 5 months of Pipelife, which is no longer there because Pipelife is fully consolidated. And in 2013 we're talking about a 50% holding in Schlagmann and 50% holding or participation in Tondach Kleinstetten. Those are the net contributions to the result. Interest income, same as last year, and other financial results is accounted for by the one-off items which we booked in 2012. So we have a profit before tax of minus 3 million compared with minus 36 million the year before. Income taxes more or less the same as last year. we still have to pay tax in some countries because we are profitable there. Okay, when you're profitable, you have to pay taxes. But unfortunately, we are profitable in countries with high tax rates. The Nordic countries, pipeline for the Benelux countries, and we are paying taxes there. This is why we have a minus here. And nevertheless, at the end of the day, our loss is down to minus 7.8 million in 2013.
Very briefly, Tondach-Kleinstetten. You know, Tondach-Kleinstetten is a producer of clay roof tiles in Eastern Europe. There are 15 plants in 11 countries. Wienerberger holds 50% of the shares. The other 50% are family-owned. Consolidated equity in financial results, revenue in 2013, 155 million. The minus of 2.6 actually is due to Tondach. 2013 was a difficult year for producers of roof tiles because of the bad weather, snow until April. There were restructuring activities similar to those at Wienerberger in our brick segment, and we also introduced working capital optimization measures. So we tried to generate cash from the working capital, and the cash flow at Tondach was better than in 2012. So our activities showed an impact. Schlagmann did better. It's a joint venture in Bavaria, in southern Germany, 4 plants, and this actually shows the impact of our product innovation. Schlagmann produces infill bricks, insulating bricks, with a revenue of 60 million. They were profitable, so this is a very good example of the impact of our measures. Bavaria, of course, is is the richest region in Germany. Next, cash flow, a positive cash flow development. We are particularly happy about the gross cash flow. Here we succeeded in achieving almost 40 million more. That is 30% more gross cash flow. I'll come back to the working capital later on. The 26.2 change in working capital, again, is the result of very good performance. December was still a good month. We succeeded, despite our low stocks, to generate cash. Investments, here we were a bit careful at the beginning of the year because we saw that things would be getting more difficult because of the winter months. So we postponed some of our projects until 2014, and we are a bit below our guidance, 15 million. There was a slight shift here, but this still shows that we are strong. After all, in 2013 we had another 5 months of pipe life, but still we could maintain the level of investments at that of 2012. This does not only include maintenance, but also investments for technological upgrades in the production process and product innovation. So these filling or infill plants are already included in these investments. 8 million, this is due to sale of bonds, divestments and other. And we have a free cash flow of 93 million in 2013. And from this we need to deduct growth capex and dividend for the hybrid coupon, so we have a net cash flow of 49 million. We didn't have any growth capex in 2013. And you can see the difference in the dividend and hybrid coupon, minus 33 as compared to minus 43. So much on these figures. Altogether, we had a positive cash flow for 2013. A brief explanation on working capital development. We had we could increase our inventories, we could decrease the inventories, and thus generated another 35%. Trade receivables, minus 4, and the 26, and we have 26 as compared to 102 million regarding change in working capital. Last year we bought Pipelife at the beginning of June, on the 30th of May, and then of course since we are a cyclical enterprise, we had maximum stocks, and we got 100 million from Pipelife. We cannot do this year, so we cannot sell our stocks 2 or 3 times. If that was possible, I would certainly do that. But working capital without Pipelife declined by 28%, and we now stand at our target of 28%. This does not mean that we have completed our task. We now need to make sure that this will not change. So we see positive signs here if capital increases, because it would mean higher revenues. Total investments, very briefly, 106 million as compared to 168 million last year. This, of course, is due to growth capex and what we had to pay for Pipelife. I think it's clear, even though some people were skeptical when we took over 100% of Pipelife. Pipelife has clearly shown that its performance is good and stable, and contributes to our overall performance. Development of net debt, 602 million at the end of 2012. 165 could be eliminated because of gross cash flow. Then we paid out a dividend, so we have the minus 10%. Then the hybrid coupon. Total investments 106 million, working capital and others minus 48 million, and this means a total value of 538.9. So we had about 500 million cash in our balance sheet at the end of the year. Looking at 2014, this means that we can actually pay out the bond that in June, and we do not need any capital for financing working capital. So we can ensure the financing ourselves. We will, of course, also consider 2014, the development of markets, and we will then see what the cash flow will be. And we will, again, show a proactive response. We will want to reduce our net interest costs in 2014 because we don't have a negative carry from cash. So next year, our net financial costs will be at least minus 6 million. Again, a positive contribution to cash flow. Strong liquidity and a strong balance sheet, low gearing ratio. I think I don't have to explain that in great detail. A strong liquidity and balanced term structures. We have already provided cash for the bond in 2014 and partly also for 2015. So we will have net cash in 2014. We still have our hybrid bond in 2017, and then you can see that we have a very well-balanced term structure. This is also due to the financial discipline that we have observed in recent years and that we will continue to observe. Treasury ratios, no problem here. Net debt EBITDA stands at 2 million and this is far below the value of 3.5 that we would need to meet. So actually this is a very good result because we need certain interest data for our debt costs. I hand over to Heimo. Thank you very much. I can be brief because Willi has already given you the figures. Let me just look at the segments. First, clay building materials in Western Europe. This segment, of course, was characterized by the difficult market environment in France, the Netherlands, and Belgium. But this was compensated for, could not be fully compensated for by the positive developments in England and Germany. But the measures that we have taken in the Netherlands, in Belgium, and in Germany have been implemented and will be helpful also this year. Eastern Europe, revenues have been almost stable. This is the result of our proactive price policy. And it has confirmed the trend in Eastern Europe. Bulgaria and Romania achieved stabilization at a lower level. The Czech Republic, Slovakia, Poland, and Hungary showed a decline. But right now, our plants in Russia are working to full capacity. Pipes and pavers, again, a similar picture. As Willi pointed out, the consolidation of Pipelife, of course, is a contributory factor. Let me once again mention the difficult market situation in the Netherlands and in France. And also there was high price competition. And we already closed down plants in 2012 and 2013. Eastern Europe showed a positive development. In the markets like Bulgaria and Greece, Pipelife showed good results, and the plant in Russia is also successful. Semmelrock, again, here we changed the cost structure, the overhead cost structure, and all these activities had a positive effect. North America, as I've already indicated, there's moderate growth of housing starts because of a positive market development. Willi already mentioned that we have reduced our stocks. American plants work to below 60% of capacity, between 50 to 60%. And this is going to improve somewhat this year. Plastic pipes, here we have bottlenecks. We want to reduce these bottlenecks, so again, we hope to improve our results. 2013, ladies and gentlemen, is history. You will probably be interested in the outlook for 2014. We now stand at the end of February 2014, and the map for Wienerberger looks a bit more friendly than the one for 2013. What is shown in red are countries with negative development. There are 2 points I would like to mention. We start from a very low level. There are markets where the results were clearly below the level of 2009 in 2013. However, they have shown signs of stabilization. Still, we start from a very low level. We expect double-digit growth rates in America as regards single-family and two-family homes. We expect that housing starts in the United States will reach the figure of 1 million. And this should actually mean double-digit growth rates. Regarding prices, there won't be many changes in North America because price policy is under pressure and will remain under pressure. We hope that we can achieve stabilization the second half of the year. Europe, I think the momentum in England will continue. We've seen this in the first 2 months already, so we expect a considerable growth. Regarding prices, we did not increase prices in England because we had long-term delivery contracts. They have been adjusted, and we can expect to get a positive price effect. Continental Europe. In Germany, we will see a more favorable development than last year, and this also holds true for Belgium. There will be no further decline. We expect a decline in the Netherlands and in France, but we hope, and this is our assessment of the situation, there will be a decline of no more than 3%, less than expected. The Netherlands are going through the worst year after the Second World War, but we expect that there will be stabilization. There's one positive aspect. Poland, it's the most important, most significant market in Eastern Europe, and again we expect a stabilization or improvement, and we expect to benefit from that. The RMI market, the renovation market, also shows a positive development trends when compared with 2013, and the roof segment of Wienerberger probably will show a positive development. Let's take a look at the individual segments. We expect 2% cost inflation regarding clay building materials in Europe, but we expect price increases of 1%. So we hope to be able to reach these price increases. As regards Eastern Europe, it is difficult to say whether we can increase our prices because actually building activities won't start until March. So we will need some time before we can give you a clear signal. Cost reduction programs are being implemented or have already been implemented, so we are hopeful to achieve the expected 17 million reductions. And the total of cost savings in the period 2012 and 2014 will be 50 million. And we expect an EBITDA contribution of 10 million euros from the sale of non-operating assets. So let me sum up. This segment, clay building materials in Europe, will achieve growth in 2014. North America. As I've already indicated, we expect a double-digit volume growth in the brick business. We will carry over our flexible price policy of 2013 to 2014, and we will improve the utilization of our North American plants in the second half of the year. Pipes and pavers. Here we expect a stable development in our core markets. Again, let me mention Norway, Sweden, the Netherlands, France. These are the most important pipeline markets, and we expect a stable situation and in some countries also a positive development. The project business had an excellent year, 2013, and it will be difficult to top that. So we rather expect a slight decrease in the project business. I'm saying this because it is a very profitable segment. Steinzeug, Keramo, here we have already considered the closing down of one of the sites in the Netherlands, and we expect growth, a slight revenue growth. And the same holds true for Semmelrock. Semmelrock will benefit from positive market developments. So summing up, we can say that we expect a stable to slightly positive earnings. Here a summary for the entire Wienerberger Group. From today's perspective, we expect an EBITDA of 300 million in 2014. When looking at the markets where we are represented, I think we are moving in the right direction. We will see what the results are after the first 2 months. So far, things are going well. And when comparing the situation with 2013, of course, we must bear in mind that due to weather conditions, there was hardly any business in the first quarter of 2013. The situation today is quite different. But and this again means that the results in the first 2 months should be taken with a certain measure of care. They contribute only a small part to the overall annual results. I would not be overly optimistic as regards economic developments in Europe. As I pointed out, we are starting from a very low basis in some countries, sometimes below the level of 2009. Developments are positive, but we should not expect reaching a very high level in Europe soon, even in England and in Germany, where positive developments are already taking place. We are far from a top result. Eastern Europe, here we need a bit more time. We need to see whether the markets will pick up. We expect to invest 125 million this year. As Willy already pointed out, normal capex will also include investments in new technology, new products. This is slightly more than we spent in 2013, but the reason is also due to the fact that we have postponed some projects. After all, the date 31st December is just a date for our balance sheet. It does not mean a break between 2 years. So we will actually invest a bit more than last year. Depreciation around 200 million. So this gives you a good idea of the structure of our income statement. The change in the working capital will be in line with revenue development. As Willy pointed out, we will have a very stringent working capital management. And in some countries, probably we will have to consider raising the working capital. As Willy pointed out, the interest result will also show an improvement as a result of the structuring of our financing. So we expect to have an interest result of about 50 million. And last but not least, cost savings. I've already mentioned the 17 million, which we will certainly achieve in 2014, and we will report quarterly on the results of cost savings. So we believe that from today's perspective, we can present a sound forecast for 2014. And, of course, we will work hard to achieve or reach our targets. We still have 10 more months before the end of the year. Of course, neither Willy nor myself are meteorologists. We do not know how weather conditions will develop throughout the year. But we will work hard in order to make sure that Wienerberger will achieve sustainable profits. Wienerberger has been able to reposition itself. We have a much leaner and more efficient cost structure. We have also managed to build up a second leg to stand on, which is highly profitable and which also, and this is important, includes potential growth. So we believe that thanks to our policy, thanks to focusing on all these aspects, we are doing better than many others. We have focused on markets and on gaining new market shares. Thank you for your attention, and we are available for questions.
Wir beginnen mit der Frage.
Well, would you please raise your hands if you wish to put questions, and don't forget to use the microphone. I have a question concerning your guidance. 17 million through additional savings, you said. Last year, you said that 20 million had been lost due to weather conditions. Not all of that was compensated for. You may have made up 10 million, but what remains is 10 million for a normal winter. Now we have a very warm first quarter. That may add up to another 5 million. That accounts for 30 million altogether. And two big markets are growing. So that is a conservative estimate, but there are also other developments in the opposite direction. Why will project business be weaker this year than it was last year? And what about your pricing policy in Eastern Europe? Are you continuing your flexible pricing policy? Will you be doing better than last year? Why would you have to lower prices again? So how conservative is your guidance? I wouldn't call the guidance conservative or optimistic or whatever. we have a basis. We start out from the 266.5 million EBITDA from 2013. But as of the 1st of January, we start from zero. So the only thing that we know for sure is 17 million savings. Business has to be done in the market, that's for sure. The first quarter is going to be better, provided March doesn't bring us snow and ice all over Europe. Because this is something you always have to bear in mind. Our business is done in local markets, and local markets are dependent on weather conditions, and we don't know what the rest of the year will be like. That's one thing. Do we have to catch up to 20 million or something else? We base ourselves on serious and responsible estimates for the full year. If markets improve, we will be fully open to that. We will try and make the most of them in terms of volumes. Now, you ask about project business in Pipelife. 2013 was an unusually good year. If there are major projects like the ones in Africa, that's fine. Things are in the pipeline, and we have to wait and see if they are materializing. For the time being, we don't see a development as good as it was in 2013. The business is highly profitable, I mentioned that, and that has its implications for the Pipes and Pavers division. As regards our price policy in Eastern Europe, we stated very clearly in 2013 that we wanted to pursue a proactive pricing policy for strategic reasons in order to gain market shares. We succeeded in doing that, and if the market situation were to improve, which, by the way, we expect in our guidance, then we will be able to increase prices by 2% in order to cover the rate of inflation, the costs of inflation. That's our main target for Eastern Europe. So, in brief, we're going to make every effort. I don't want to make a definitive statement here and now, because in recent years we have been confronted with major surprises, weather surprises, financial market surprises, but also surprises of a political nature. I take it that the market development will be relatively healthy and we can reach the 300 million. As regards the realization of non-operating assets, you said you got 13.6 million cash for real estate worth 22 million. Yes, that was cash received. We sold to a big developer in Great Britain, and the cash will start flowing in when the developer starts building residential estates there. So it's a book gain of 22 million? No. 22 million is the revenue generated. So my question would have been, the 10 million in the guidance, is that additional sales of real estate? No, the 10 million is what we include every year. We'll try and do more. We had 10 million in the guidance for 2013, and we got 3 or 4 million more. It may happen also in 2014, but projects will be realized whenever they come up. So we can never issue a guidance on what's coming or what's not coming. It may be projects like this one that can be booked in the year's result, but the cash will come in later. So the 10 million in the guidance are part of the 300 million. Now, what I wanted to find out is whether the 10 million are the additional book gains from the transactions made in 2013. No, the transactions have already been made, and the guidance was for 100 million cash, and that includes 50 million contribution to EBITDA. A question about the markets in Europe. You said that you benefited from subsidies granted in the United Kingdom. Do you expect similarly positive effects in other countries? In the Netherlands, -9%, and stabilization in the renovation business. Why this discrepancy? And why -9%? The Netherlands was already very low over the past 2 or 3 years. Why another -9%? In 2013 and 2014, the decline in new housing starts is due to the fact that social housing plays an important role in the Netherlands. In the early 2000s, the Dutch government decided to privatize social housing, to exclude it from the public budget, which meant that the debt burden for developers of social housing was relatively high, and they came under severe pressure during the crisis. The Dutch government, due to its own austerity measures, is not providing finance for these developers, so housing construction is very, very limited in the Netherlands. And of course, there's a backlog building up, and the situation will have to change sometime in the future because they will need new housing. But currently, the scenario is very difficult. In the Netherlands, since the Second World War, there has been a system in which the Dutch people take out loans for the purchase of real estate for the total purchase price because they could deduct interest payable from their taxes. This is no longer the case. And for a long time, there was a great deal of uncertainty. Now the situation is becoming clearer again. There will be additional construction activity, but the providers of finance in the Netherlands are restrictive. They don't grant loans easily. So that led to a downward development, a downward spiral in the Netherlands. Many developers went bankrupt, real estate companies came under pressure, and building activity was slow. It's not like Germany and Belgium, where you have many single-family homes. In the Netherlands, they rather build large housing estates. And an initiative was taken by the government last year to reduce value-added tax on building materials. Value-added tax has gone down to 5%, so I do see a slightly more positive trend, and that accounts for the better performance there. A question about the North American market. Do you expect a stable price momentum for 2014? Prices came under pressure in 2013. That will still be felt in 2014, but we hope that the situation will calm down in the second half of the year. Do you think that you will achieve a positive EBIT in the United States? Well, that depends on how our revenues develop there, our sales. I told you that we're still working to a relatively low level of capacity, so we need a higher capacity utilization in order to achieve a positive EBIT. Of course, this is our target, our goal, and if we can sell enough products, we will reach that goal. When you were talking about prices, you sounded slightly more optimistic during the third when you reported about the third quarter, at that time you still expected price increases to be higher than the rate of inflation. Now you're saying that they will just cover the rate of inflation. Is there a higher price pressure? Well, whenever we start a new year, our intention is to adjust prices so that we can cover the rate of inflation. And during the first quarter, we can see what actually is possible. So we base ourselves on 2% cost inflation, and you need to achieve that first in terms of prices. And the markets mentioned in our guidance, there are two markets that present a positive picture, but look at the other markets where we expect downward development, and we have to implement our price policy there. It's not that we are more prudent, but we are realistic, and you first have to do what you intend to do. So in the United Kingdom, if I understand you correctly, you will be able to increase prices more than the rate of inflation. And in other countries, you may not be able to do that. Yes, that's correct. Another brief question on prices. The 1.2% you mentioned, does that include the improvement of the product mix? Yes, of course, because we can't state that separately. We are withdrawing to a growing extent from highly competitive products, clay blocks, for example, in Germany. We are moving out of that market step by step, and we will replace that through premium products. Trade receivables have improved considerably in the fourth quarter. That was to be expected. Did you sell receivables? No, the level is the same as last year. We didn't sell anything in addition. What's the level? 70 million. And it's stable from 2012. Now you're talking about smaller investments or acquisitions. In which regions and in which segments? Well, we're not sitting here with a thick wallet and going on a shopping spree. We take it that there will be a couple of opportunities. That's usually the case when the economy turns around, but we will look very, very carefully, no matter if it's in pipes and pavers, in roof tiles, or clay blocks, in the markets we operate in. And if we find that it's a good fit for our core business, if we expect synergies, we will look very carefully. You know, we want to improve our CFROI on a sustainable basis. We succeeded in doing so through the pipe business. And if projects come up, we hope to continue along these lines. A final question. In your guidance, you said that you're aiming at a positive net result. After hybrid? Yes, that would be after the hybrid. The figures are quite clear on that. It won't be easy, but it's doable. And we're all hoping that things will improve. Any further questions? The two brochures which you distributed today have no page numbering. It would be much easier if we had page numbers. Do you intend to produce your annual report also without page numbers? That was my first question. Second question, in the past, you always said that core assets would not be sold. Now, you have set a target of 100 million for 2016. Will there be additional sales of assets? Well, of course, the annual report will have numbered pages because otherwise it would be impossible to read. Second question, the 100 million refer to non-operating assets, non-core assets. We're not selling any core operating assets. We're only selling things which we don't need. So there will be nothing on top of the 100 million already mentioned. We have to make quite an effort because we're talking mainly about real estate, and some of that real estate is in Eastern Europe. It's buildings, land, and others, but only real estate. Any further questions? If that is not the case, thank you very much for your attendance and for your questions. On the 9th of May, we're going to present our first quarter results. Thank you very much.